Colin, we'll ask you how you get to that price target in just a minute, but it would seem to me that if you're going to sell roughly 100,000 fewer cars in a quarter, you're going to than you did than previous estimates. You are probably not going to have the profits you might have had.
Without question, there's a lot of operating leverage in this platform as they scale up units. And I think what investors are going to be looking for tonight is not necessarily what the 2Q results look like, but really more what the company looks like a year from now as they ramp up their Austin and Berlin facilities. And what we're expecting to hear from them is around takt times, learning cycles, and acceleration in actual production there. And as folks get a sense of what those factories are really going to produce at, we can get a sense of the margin and the profitability.
Based on the delays that buyers are seeing from Tesla, I expect demand is very high right now.
Yeah, it's an important element that I think a lot of folks are missing around EVs. Some of the recent studies that we've seen are looking at 14% of consumers are looking to buy an EV, in the US and Europe. We see the delta between an internal combustion engine and a base vehicle and an EV being around $16,000, $17,000 right now, with the advantage to EVs in terms of total cost of ownership. And so we think demand is really off the charts and well in excess of what any capacity, Tesla and the industry combined can really serve right now. So we think pricing is going to continue to be strong, and we'll see how some of these other platforms ramp up and what sort of hiccups they run into.
Colin, what do you say to those like Boris Schlossberg last hour who mused we may never see 1,200 again for Tesla? How do you justify a price target above that level?
Yeah, this is a really important question because the earnings leverage and the margins are really what get us there. There's, certainly well north of $50 of earnings power on this platform as they scale up to multiple millions of units a year in terms of production, and start layering on some of the recurring revenue that they could with insurance and the full self-driving. And so as we look at that and the multiple that you can put onto that that sort of earnings power, there's easily room to get to our price target here. And what we're watching for tonight are signs that they're going to get into the 30% plus gross margin realm on the manufacturing and really can start executing on monetizing some of those recurring revenue streams.
The fundamentals of the business, of course, and the profit power of the business, of course, are the most important factors that would determine what the stock price is. But there's another factor here, a bit of a wild card, and that's the CEO, Mr. Musk. How have shareholders viewed Mr. Musk's involvement with Twitter, the fact that he's going to be sued, the fact that he is certainly going to have some distraction factor going forward? Is that being priced into the stock now? And how does, if so, how does that cloud dissipate?
Well, one, I think a lot of investors aren't overly concerned about it. There's certainly some shorts that are pushing that narrative, but a lot of the folks that are along the stock understand the ups and downs of Elon and the benefits of his leadership, and then some of the risks that are associated with it. I think a lot of this is really priced in. I think that stock movement has really tracked what's going on with production and gross margins, historically, and there's a very easy way to track that. And so as we look out going forward, I think, some of the distraction coming off the table for Mr. Musk is important for some of the sentiment and some of the short stories, but really what's going to drive this stock is ultimately financials and performance.
Shepard Smith here. Thanks for watching CNBC on YouTube.